What is going on, investors? Hopefully guys are doing well out there. That is right. It is Friday, and that means it's time for the FAANG Stock Recap Show, where every Friday we recap all the major news of the week and the technicals from all the major FAANG stocks, plus Microsoft and Tesla, and it's Super Bowl weekend. We're going to kick things off like we always do with Facebook. Start of the week at $236 per share. I tell you what, if you immediately bought the dip on this one, I think you made a mistake. This stock went all the way down, actually under $220 per share to finish the week at about $223. We'll talk about that from a technical perspective. Facebook is going to offer employees of Metaverse Vision details in a meeting on Tuesday. This is according to reports of internal memos going around Facebook. The company is just now going to get kind of an all hands on deck and share the vision for the metaverse. I think this is kind of interesting considering they changed the vision of the company and the name of the company several months ago, and now they're just now getting the employees together to get kind of an all hands on deck on the vision of Facebook. I personally think, and this is just opinion, I think Facebook is playing this by the seat of their pants. They're doing this on the fly. I don't think they really know what this metaverse is going to be. I don't think they know what their role is going to be. I think more importantly with the metaverse, because I've got a ton of comments on my channel on last week's video, all the Facebook videos that I've done, and a lot of people are saying, well, all the CapEx they're going to be doing is going into the metaverse. Here's my point about the metaverse. First of all, we have no idea what this is going to be. Okay, yeah, there's some theories about it, but we don't know. What we also don't know is how is the metaverse going to cannibalize Facebook's existing business? If the metaverse turns out to be this awesome thing, which I certainly could believe that, I certainly can see a lot of arguments for that, and I can believe that, but how much will the metaverse take away from core Facebook, core WhatsApp, and core Instagram? Could it absolutely nuke those businesses into MySpace of oblivion? Yeah, it probably could. And so how much upside really does the metaverse actually have, since it's got to replace a multi-billion-dollar business to begin with? And look, those are some things that we're going to be thinking about likely with Facebook over the next couple of years. This is not something that's going to resolve itself over the next couple of months, because look, the company on Tuesday is just now sharing the vision with their employees. Okay, now the employees are just going to have the vision. They're not going to be able to execute on that vision and see the fruits of those labors for many, many years down the road. Peter Thiel is exiting the Meta Platforms board and will reportedly focus on working for former President Trump's political work. And look, so we'll see what happens. The timing, I just think, is interesting here. Peter Thiel obviously being a somewhat, I'll put this in quotes, like controversial. I don't necessarily think he's controversial. I just think he's conservative, and people find that to be somewhat controversial these days. And look, it was interesting that he was on the Facebook board. It was interesting to have his point of view. I think him exiting at this time when the stock is tanked and the stock is in transition. Could there be more going on behind the scenes? Could he be disagreeing with the direction the company is going? Could he want the Facebook to have been doing things differently over the last year? Maybe he is just, we are in an election year, so maybe he is just going to work on more conservative platform. We'll see what he decides to do. The guy certainly has plenty of money. He can do whatever he wants. Moving on to Apple, start of the week at 173, ended down to 168. Boy, stocks really slid into the close today. We had a lot of negative news come across towards the end of the day. Apple may be in for an inflection point, and that is a positive for higher enterprise adoption. And I've been saying it here on the channel. I think people think I'm some Apple MacBook fanboy. No, these MacBooks are better, okay? And here's kind of the data behind it. Somebody on a Reddit forum said investing $32,000 in M1 MacBooks could save the company more than $100,000 in productivity, as it would cut Android build times by more than 50%. Engineers for Square found that the M1 MacBook Pro was 65% faster than the Intel-based MacBook Pros and likely Intel-based PCs, despite the MacBook costing more than $5,000. I paid about $5,500 for mine. It has saved me hours already, hours and hours of upload times and rendering times, and quite frankly, it has allowed me to spend more time with my family, and that is priceless, my friends. Apple boosts their retail employees benefits benefits as the labor market starts to tighten. We will see multiple evidence of this. Obviously, we saw the CPI reading just a couple of days ago, and that was just a massive number. And now we're starting to see not only in the consumer price of goods, we are going to start to see it in labor. This is a big problem. Apple obviously has a large competitive advantage because the company has a lot of money, but they are increasing benefits from sick days going from 6 to 12. They're giving paid childcare and elder care. You're getting paid vacation time even as a part-time employee. We are going to have to see wages rise and benefits rise across the board. Who will that hurt? The small mom and pop businesses, the businesses that aren't making a lot of profit. Who is it going to benefit? Mega cap companies like Apple, Amazon, and pretty much all the companies that we talk about, because they can comfortably absorb those costs, at least for a short period of time. Apple to unveil tap to pay for contactless payments on their iPhone. This is not coming out yet, I don't think. I think we've got a little bit of time before this comes out. People think this is like an attack at Square, an attack at PayPal, an attack at Shopify has an offering similar to this. I don't know. I think if you're a retail store, you're still going to use something like Square. For a more casual payment, this might work if you're setting up at a flea market, if you're setting up where it's a little bit less informal than a store. Something like this will be interesting. You can tap with those contactless cards. You can also pay with Apple Pay directly to another phone, similar to how you send Venmo, or similar to how you send those things. So at trade shows, flea markets, those type of environments, this could be an attack at Square, but I don't necessarily think this is going to absorb. I think there's enough business in here. I don't necessarily think this is going to absorb a lot of payments out of Square. I could be wrong. We'll see how the financials line up later on. Apple is buying an artificial intelligent music startup for an undisclosed sum. Likely it's a pretty small amount, but most people suggest this will obviously Apple Music, but you obviously have the HomePod. You also have Apple Fitness Plus, but it could mean a move into something else, okay? Apple is constantly doing these smaller acquisitions that tend to lead into something bigger. They obviously see something here, and we'll see what they decide to do. Apple is called to be a favorite to bid for Peloton, which has dropped to about, I think, a $12 to $13 billion market cap. We obviously know that's what Apple makes in about a month. I think Apple does about $30 billion worth of operating income, maybe even in net income in a quarter. And so about 10 to 12 billion is what they net out in a month. So they could buy a Peloton just in the cash that they generate from an operating perspective in a month. And so obviously they would have to pay a premium likely for Peloton as well. We see that Nike is rumored here as well, and Amazon. I don't know how official these rumors are, or if this is just analysts floating this because they have clients that need to dump Peloton stock. I don't know, but I would expect Peloton to be acquired at some point. It does make some sense from a valuation perspective. Moving on to Amazon, started the week at $3,217, ended the week at $3,123. Interesting from a technical perspective. We'll get to that in a moment. Telehealth providers slip. That would be Teladoc Health and several others slip as Amazon Care goes nationwide. This is essentially, I'll put it in quotes, a knockoff of like a Teladoc Health offering or something like that, that allows you to essentially FaceTime your doctor. It was used internally over at Amazon by employees, and now it's kind of a nationwide product. It'll likely cut into not necessarily the demand for Teladoc's service, but likely their pricing power, because Amazon, you know, is going to come in kind of at a rock bottom on that pricing, because guess what? They own all the servers that it runs through. They don't necessarily have to pay for that like a Teladoc Health would. Velodyne LiDAR surges after Amazon packed with the sensor maker. This stock was like a penny stock, and then it surged like 80 or 90% in one day. It's at $4, but that's after surging over 87%. Amazon's doing interesting stuff in the EV space. They're not absorbing all that R&D costs themselves and building out employees and teams like we've seen Google do that. Rumored that Apple is doing that as well. Obviously, Tesla has been doing that since that's their core business. Amazon's going a little bit different route with this. They're basically investing in companies, Rivian, for example, but also this and other companies out there. They're doing small investments in them, making them do all the R&D work, and then they potentially capitalize down the road on it. Amazon to more than double its base pay to $350,000. This is not for the warehouse workers. Unfortunately, I'd love for those people to make more money, but as an Amazon shareholder, we know we can't pay those people $350,000. This is for us other employees, more executive tier type employees over at Amazon. You go from 160, now you can make a base pay up to 350,000. Again, this is a sign of inflation if I'd ever seen one in my life. Amazon buying Peloton, more Peloton rumors would give it several benefits, including a Prime boost. So me as a Peloton owner, I think I pay $40 a month or something. And if Amazon buys them and rolls that into a Prime benefit, boy, that would be awesome. It would save me money every month. This would be an interesting tie-in with Amazon, obviously with their distribution and their ability to deliver these things and all their touch points with the customer. Certainly would be an interesting buyout opportunity for them. I think it's also, Peloton is also a comfortable acquisition for any of these companies as well. As we'll talk about, there's other acquisitions we'll talk about here with NVIDIA gone bad. We've talked about one with Microsoft as well. Obviously, these acquisitions are hard to do, but one with Peloton I think would tie up nicely with Amazon and Apple, and I think they would get by regulators with that. Now, speaking of acquisitions for Amazon, their $8.5 billion MGM pursuit is going to take more time from an antitrust report. The FTC is just going to make them sweat on this. Why would the FTC, why is this an antitrust problem? Okay, Amazon probably has a single-digit market share when it comes to streaming and entertainment and TV. It's just because they want to rake these companies over the coals. They know they have a lot of money. They want to have influence and power over them because Amazon servers control a lot of things and they want them to control the information and the media that they want to. So if the government allows this to go through, they want Amazon to remain friendly with them. I know I'm speculating here, but it's pretty well known what is going on with these companies since we're not seeing any meaningful legislation. Even bipartisan legislation is not being passed at the current time to regulate these companies. And so what is happening is literally just a shakedown by the government to keep these companies on the side that they want them on. That's period, end of story. You could argue with me in the comments if you want to. I don't think there's a lot of evidence that there's anything other than that going on. Moving on to NVIDIA, start of the week at 245, end of the week, is that right? Up to 249. I don't know if these prices are right. I have it 240 at the end of the day. We'll get to it from a technical perspective. My apologies if those prices aren't right. The NVIDIA ARM deal collapses as ARM will set to IPO with a new CEO. I guess theoretically, maybe NVIDIA could be a participant in the IPO. I don't know if they're able to do that from a regulatory perspective, but maybe they could get a piece of ARM by participating in the IPO and being a massive buyer of that. And I might be completely wrong. Maybe that's not something that these companies could legally do, or maybe from a regulatory perspective do. But obviously this was a deal that we thought would go through initially, or was actually more hopeful that it would go through. And unfortunately that deal has fallen apart. Moving on to Google, start of the week at 2,877. If you did not buy the rip after the announcement of the 20-to-1 stock split, this stock has pulled back just like we thought it would into an area of demand. We'll talk about that from a technical perspective. Google is to pay a $20 million settlement fee in a Nest thermostat patent trial. Another company named EcoFactor claimed to have patents and wanted $5.16 in royalties for every Nest unit sold between 2020 and 2022. That would total about $29 million. They also disputed another patent. Google ended up losing one of them and will lose $20 million, which is quite frankly not a lot of money to them. Google faces a 2.1 billion euro, that's a significant amount of money, in a Sweden lawsuit over shopping results. Obviously, Google is embattled in this all the time, that they favor their own results or sponsored results over organic results. My guess is Google is probably guilty of this and they'll negotiate some kind of fine there, as I'm an online advertiser and I deal with it myself. Moving on to Microsoft, start of the week at 306, weeks ended closer to about $300 per share. I actually have it at $295. I think that's correct. I almost bought the dip on that one. I'll talk about it from a technical perspective why I did not. More acquisition news. Pinterest gains amid takeout speculation after that stock dropped. We did a video on Pinterest, I think it was last week. Yeah, this thing's way down because this stock I think was up over $75. It was like a $40 billion company, and now it's closer to $17 billion. And this is a company with positive cash flows and positive net earnings, I think, as well. This would be an interesting acquisition target for Microsoft. Obviously, they would have to pay a premium for this. We know that they did $69 billion for Activision. I don't know how they're going to finance this deal. But look, Microsoft is being very aggressive. This is just a rumor that Microsoft would be interested in this. I will tell you, I run a lot of advertising through Bing, and I get a lot of traffic from Pinterest through my Bing ads. So Microsoft actually has visibility into Pinterest's ads because I think they serve some ads on Pinterest for Pinterest, or that's just one outlet that they use. This would be an amazing tie-up if Microsoft could get this company. Honestly, for this price, I think if we look at LinkedIn and how well LinkedIn has done for Microsoft, I think Microsoft could acquire this and actually be very good. Whether or not regulators would allow them to do it, I don't know, but I think that would be awesome. Microsoft is just on a buying spree. They're looking at the cash on their balance sheet, and they're seeing inflation, and they're like, we need to get rid of this cash. And I can't applaud Microsoft's management for a better job. I love that. And I would love for Apple to follow suit. Apple's really the only other company, and Google to a certain degree as well, that has a significant cash pile. Out of all these companies have a cash pile, but Apple, Google, and Microsoft have the biggest. And I absolutely love how Microsoft is trying to get rid of that cash as fast as they can. They are trying to acquire, all this is rumored, this cybersecurity firm Mandiant. They were actually known as FireEye before, and they were rebranded. This is estimated to be a $3.7 billion deal. So this is actually a pretty significant deal. We'll see what happens there, but I love Microsoft's aggressiveness to get rid of their depreciating cash. That is one of the reasons why I am considering buying Microsoft on the dip. Microsoft unveils an open app store principles as it looks for Activision approval. So obviously with that Activision approval, people are worried that maybe Call of Duty will go exclusive to an Xbox, but that doesn't make a lot of sense, right? If you're a game maker, PlayStation has significant amount of market share. And look, as I understand it, I might be wrong, okay? As I understand it though, the actual PlayStations and the Xboxes aren't huge profit centers. They're huge revenue centers. What is a huge profits are the licensings of the games, are the games that they make internally and sell. Also, obviously, the app store and the subscription services on top of the Xbox that a lot of gamers use to play online and to play with friends. And for other services, that's where the money is. And so it would make sense that Activision continues to make games for the PlayStation. Obviously, Microsoft is going to be doing absolutely everything they can. They'll make every concession they possibly can in this deal because there is a massive multi-billion-dollar breakup fee if they don't get that deal done. Moving on to Tesla, start of the week at 940, ended the week much lower at about 862. Oh my goodness, we got to talk about that from a technical perspective here in a minute. Tesla sees its fourth recall action in 2 weeks. Most of these happen to be kind of over-the-air software. I don't think we have any physical installs. So when you see these Tesla recalls, it's similar to how your phone, every few weeks, Apple does an update on it. For the most part, that's what we're seeing with Tesla. I'm not too concerned with that from a cost perspective. Tesla to get subpoenaed from the SEC over settlement violation in 2018. This is relating to Elon Musk making several tweets just a few months ago about liquidating his 10% Tesla stake. The SEC took issue with that. My guess is Elon Musk will get a couple of more slaps on his wrist because that tends to go away from what they want from a disclosure perspective. Moving on to the technical segment of the show. Oh, my breakdown with Facebook. Obviously, we had this massive drop after earnings. We talked about how we got under this initial area of support, 246. That was bad news. We knew there was support here at 220-ish. Okay, we could probably drop this a little lower. When I say 220-ish, you can plus or minus $4 to $5 if you want to. We got a technical bounce earlier in the week, all the way up to 235. That was an opportunity to sell. If you get any technical bounces in this one back up into this 230 range, that is your opportunity to sell, okay? Honestly, because your opportunity to, so you're asking yourself, where's your opportunity to buy with Facebook? You need to get back up above 250, okay? And I know that doesn't make a lot of sense. Some of you are saying, I'm trying to buy the dip, I'm trying to buy the bottom. Don't try to do it here. Wait till we get above this area of resistance at 240, because look at this volume right here. So many people, and I could read on my, I could read it from the volume on the chart, but I had so many comments on my videos. I bought the dip at 230. I bought it at 240. And I was just kind of cringing to myself saying, no, you really, if you wanted to buy it, you could buy it down here at 220, but I don't think I would do that. I think you're selling up into this area right here. You could potentially buy it if you get back over, I would say about 250 on this. When you get back over 250, guys, you've got this whole gap that could potentially fill. You could go from 250 to 290 and then have two areas of support underneath your buy, okay? I would definitely set a stop loss somewhere underneath 245, but if it breaks that, you've got another area of support down here at 220. If you break this 220 area, oh my gosh, it could get ugly really fast with Facebook. Easily under $200 per share on this one. And some of you will bring up, well, it's only a $600 billion market cap. The PE is only, XYZ on this one. It doesn't matter. It doesn't matter. This one from a technical perspective doesn't look good. We also can compare it to Google, which has a higher growth rate, better profitability, a better outlook, less iOS challenges. They're not pivoting to the metaverse, which might cannibalize their own core search business. Look, we can just make a ton of arguments in this one. I would not buy the dip on this one. I would sell the rip. The only way I would buy this one maybe is if it got over 250, but I personally would be looking to unload these shares in Facebook. Not that I've totally turned against this company. I just think there's so many unknowns now with Facebook, with the iOS, with the metaverse potentially cannibalizing their existing business and how long that will come to fruition. There's just a lot of unknowns with this business. I'd rather take my money out of this one, quite frankly, put it into Microsoft or Google. That's just my opinion. You can disagree with it. That's just personally how I see it at the current time. And look, I said it on Twitter, guys. Stocks like Facebook, these are not your children. This is not your children. It's okay to abandon. I had so many people say, how could you turn your back on Facebook? Guys, these aren't my children, okay? This isn't my favorite basketball team, okay? When your favorite basketball team is about to have a bad year, you still root for them. I get that, okay? This is about making money. This is a business. This is the investor channel. When Facebook's about to have a bad season, I think they're about to have a bad year, okay? It's okay to abandon them. It's okay to get out. It's okay to wait for better days. It's okay to front run. When they get back on track and they start contending for a title again, contending for a gold medal again, we can jump back in there and reinvest in them, okay? It's okay to go from a gold medal winner, and when they look like they've fallen off the podium, it's okay to dump them, okay? That's part of investing. I've done it with dozens of companies over my life where they were a clear gold medal winner and then things change. That's what a great investor does, is they identify when things change and they have the discipline to change themselves. Don't be so stubborn with a stock like Facebook and say, this was a gold medal winner. I'm riding or dying with this like I'm riding and dying with the Lakers or the Cincinnati Bengals. Guys, that's a losing mistake on that one, in my opinion. Moving on to Apple, from a technical perspective, very boring. Very much in an uptrend. This red uptrend line is still intact. We're holding this level of support, at least very briefly, at 168. Even if we have a negative week next week and this pulls down into the, to 160, this is what's holding up the entire markets, though. That's what's making me a little bit nervous. I'll probably try to do another video maybe this weekend, maybe into next week. What's making me a little bit nervous is the Apple and Microsoft, which we'll go over here in a second. That's what's holding up the entire stock market. The fact that the all-time highs with Apple are 182 and we're just $14 lower than that. Look, we can bring up lots of stocks that are down 60, 70% or more, and some of these are profitable companies. The fact that Apple hasn't made that move is holding up the entire stock market. If these technical trends on Apple start to break down, we are getting nervous about the entire stock market. I'm not trying to be sensational here. These are the facts. If Apple in the very short future breaks below right now about 157 and or this red trend line, we get below it significantly, that would be incredibly bearish for the entire stock market, quite frankly. Moving on to Amazon, still in our range. We're still between 2,900 and 3,500. The only thing that I would change is I don't necessarily think this is a snap buy down here at 2,800. You can actually set stop losses underneath here because, again, there's this whole risk that the entire stock market could break down if the technicals continue to go in the direction they're going in. In the shorter term, yes, Amazon is in a shorter term uptrend. Okay, we've got a very, very shorter term uptrend. We're making a series of higher lows, but the stock pulled back pretty nicely in the after hours today, or really late in the session. We pulled underneath our intermediate area of support at about 3,100. Right now, Amazon is kind of trapped in this box, and it is until, quite frankly, it's not. Moving on to NVIDIA, similar type thing to Amazon. Shorter term, this was in an uptrend, but we put this big, gigantic red candle here. And so this kind of broke. We were making a series of higher lows here, and then this big red candle showed up today. That is a little ominous. Longer term on NVIDIA, you are in a pretty steep downtrend. Now, we do have earnings on this one coming on February 16th, so just 5 days from now. We'll see how that impacts the stock. You've got an area of support here at 229. You would not want to see that broken if you want to hold on to your gains on NVIDIA. You would not want to see that broken because, yes, there's area of support down here, really just south of 200. There's a much larger area of support between 120 and 160 on this one. You bet you this stock could get back into this box pretty quickly, quite frankly, if things continue to break down for the broader markets. We'll see what happens. I took profits on NVIDIA. Full disclosure, I had NVIDIA. It was a big part of my shares because I bought it way back here. I think I bought it in 2019 for roughly split adjusted like 40 some odd dollars per share. I had huge profits in this one. I took them when we were down in this range. So I didn't get it at this recent bounce, but I'm looking to get back into this one, but I'm waiting to see how this like kind of semi longer term or intermediate term downtrend, how this resolves. Okay. Cause we are making a series of lower highs here, and that hasn't resolved this week. In fact, we got confirmation that we are still making lower highs. So I'm not convinced this one won't continue to go lower, and eventually it'll bottom out, show a sign of reversal. That's when I'll get back. I'm absolutely going to get back into NVIDIA. I'm just going to get it at a likely different price. Moving on to Google, after announcing its split in its earnings and went up here to 3,000, we said I would wait on this one. There was an intermediate support where it hesitated at 27.50. This stock is down to about 26.83 in the after hours. We've broken down below this area. It looks like we're maybe potentially heading all the way down to the bottom end of our range, down to 2,500. That's where, if you want to step in, if you have a little bit of balls of titanium, you can step in down here. We will make those decisions. Okay. I say this is a buying opportunity. I don't say that I would go out and buy it. We're going to make this decision based on kind of S&P 500 technicals, quite frankly. Okay. We come over here to the S&P 500, and what are we doing? We're making a series of highs, lower highs. We confirmed lower highs this week. What does that mean? We could be in for lower sets of highs next week on the S&P 500. And if that trend continues, guess what? You will have permanently first of all, the uptrend in the S&P 500 is broken. Okay. And now we're just seeing if we're just going to top out and go sideways, or if this thing's going to completely break down and, in some words, crash or correct. This area that I have boxed out here between 4,200 and about 4,300, you would not want to see candles get below this. Okay. And right now the S&P 500 is at 4,400, and we dropped 85 points today. You drop another 85 to 100 points in this one next week, and it is going to signal technical selling. Okay, you get even below that 4,200, so you drop another 200 points on that, and you are going to see a lot of selling on the S&P 500, and that could really accelerate this to the downside. And I don't have to go into the macro environment stuff that's going on right now overseas with inflation, everything that we have going on. A lot of it's pretty negative. I would pay very close attention to your stocks over the next 3 to 4 weeks. Put everything aside. Turn off your Instagram, turn off your TikTok, and open up your stock account and make sure you're checking that, making sure you're planning out levels where you might potentially take profits on this one, because this market is looking like it might want to turn around and go south on us in a hurry. Now, if it doesn't, there's absolutely some great buying opportunities, and a stock like Google would be very, very high on my list as we've pulled down into a range where I would want to buy that one. Moving on to Microsoft, similar type thing. We made a series of highs here, lower sets of highs. It really consolidated tightly in between 305 and 310, but we've really confirmed that now we're lower than that. I think this stock is heading back into the 280s. That again is a buying opportunity for Microsoft, just like 27 or 2500 is with Google, but we will make that decision when we get there. We'll look at something like the S&P 500. I'll also want to bring up a chart of Apple and see how Apple is holding up. If Apple is holding up and the S&P 500 looks like it wants to reverse, it's found some support, at least temporary, I think you can step in here and buy. I would not be aggressively buying this environment, okay? Too many macro things going on. You're going to have interest rates rise. We could be going to, I hate to use the WAR word, but that could be on the table here pretty soon. You've got inflation. You've got massive inflation. You've got potentially a recession heading our way in the United States, and they're going to have to raise rates. Things could get really bad really quick. I wouldn't necessarily want to be long a lot of stocks in that environment. I would want to be more in protection mode. Moving on to Tesla, we are seeing this is at a very, very, very critical level. We dropped below the highs that we made back in January. That's below the 890, call it 900 level. We have now put candles below that. We're retesting this upper trend line in kind of a solid blue line, depending on where you draw this in, okay? Some people might draw it in here. Some people might draw it down. What we are retesting that line. You would not want to see Tesla get below this next week any significant degree. If you get below it, I think you're retesting this 720, 750. Now, I said that before. We kind of wicked through it. We got down to about 790 on that one. But the more you test these areas in the macro environment that we're in, people will step in here and take profits, not to mention you're creating lower sets of highs all along the way here. Almost all of these stocks, sans Apple, is really, and well, it used to be Microsoft, but doesn't look, only Apple is in a technical uptrend at the current moment. All these stocks look like they are either in a consolidation mode, heading lower. This stock looks like it wants to head lower. Google looks like it wants to head lower. Microsoft looks like it wants to head lower. Tesla looks like it's either going to bounce here or go lower. Facebook, as we know, is in a penalty box, and I think it's just going to consolidate between 219 and 240 at the best case scenario. If you break to 220 on this one, it's look out below. It's a very, very interesting time, not only in the economy, the macro environment, but with these FAANG stocks. I would caution you, just because I'm on here being cautious doesn't mean I'm negative on the fundamentals on most or all of these stocks. The fundamentals still look great. The earnings videos we just did on all look great. I am just saying, from a shorter term perspective, I know there's people watching this that trade on margin, that trade options, that have all their money into one. I mean, I get comments all the time. I have 40% of my net worth in this stock, and I want to throw up, literally. How can you do that? Okay. And so if you are overweight on some of this stuff, if you are over leveraged, if you invested money in the stock market that you're going to need for tuition, for your rent, for food, for a house down payment, for anything, you want to be very cautious over the next coming days and weeks ahead. All of these stocks are at critical levels. All of them don't look like they want to rebound. Apple, quite frankly, is propping up this entire market. And if this stock breaks down, that is a big, big, big problem for the entire stock market. We'll be here to cover it for you on the channel. Don't panic. Have a plan. That's the point of these shows, is to get you to think about this stuff. Take the weekend, take Saturday and Sunday while you're sitting around watching the Super Bowl, instead of flicking around on your TikTok. pick exit points out of here where I would exit out of these stocks. And then on top of that, when you make an exit price, just like an NVIDIA, I exited this one. I want to get back into it if we can show that we can get above. We need to start making higher highs on this one. It's making lower highs all across the way. So right now I haven't really picked where I want to get back in this one, but I'm out of this one. If we hit some areas of support down here, I would absolutely nibble on it, but it picks some exit points that you would get out. Maybe not all your shares, but maybe a portion of this. Again, this only applies to the people that want to maintain their principal. If you have this money stored away, it means nothing to you. Look, we can zoom the chart out on NVIDIA. You could have held through all these dips. Let's go to the S&P 500. You know, you can bring up a chart of the S&P 500 and stretch it back a long, long ways. Guys, you know, we can go to all on this one, and you could have held through all of these crashes and all these dips and you'd be up forever. Okay, so if you don't want to sell, if you don't want to get in and get out of these stocks, I get it. I'm just telling you, there is a portion of the crowd that tunes into this that wants to maintain their principles. I would be paying extraordinarily close attention to all your stocks over the next coming weeks and months ahead, because what does this look like right here? It looks like the crash we made back here. It looks like the crash we made here. It looks like the crash we made here. This is a topping formation in a market, and that can mean more downside is on the way. See what happens next week. Hopefully you guys enjoyed today's video. A little bit of macro mixed in there too. Have a great weekend. Enjoy the Super Bowl. Good luck with your investments.